Hi, this is Thomas. Welcome to the course Financial Management. Today's topic is Introduction to Financial Management. The definition of financial management is planning, organizing, directing, and controlling the financial activities and utilization of funds of the enterprise and applying general management principles to financial resources of the enterprise. And this course is all about financial management. Let's look at some of the objectives of financial management. One is to ensure that the organization has the funds necessary to operate. Another is to ensure that shareholders receive a fair return. Third, ensuring the best use of funds, whether that be for working capital or for new investment or for dividends or other purposes. Next is ensuring an appropriate risk profile of investments chosen by the entity. Some investments are higher risk than others, and that's simply the nature of the risk-return relationship. But if an entity is looking for low-risk, low-return projects, then those are the types of projects they should be investing in. If, on the other hand, they're seeking higher risk, higher return projects, then those are the type of projects they should be investing in. High risk, high return projects aren't appropriate for all entities. It depends on the risk profile of the organization. And finally, to plan a sound capital structure is also an objective of financial management. The right mix of debt and equity, the right mix of short-term and long-term tools for the organization's financing. Functions of financial management include identifying what capital requirements the firm needs, determining the structure of the company's financing, again referencing equity compared to debt, short-term compared to long-term, then selecting what sources of funds are best for the organization. There are multiple options for debt financing. There are various options for equity financing, and selecting the right option is one of the functions of financial management. Investment decisions, deciding which particular projects to invest in, is a function of financial management. Determining dividend policy and whether there is a dividend. Some companies pay dividends to shareholders and some companies retain all earnings, and companies that pay dividends usually don't pay out all of earnings. They're maintaining some of that equity, some of those earnings for internal investment and maintaining an adequate supply of working capital for the company. Cash management is ensuring that adequate cash is available to cover the organization's working capital needs and any debt financing requirements, but also ensuring that excess cash isn't being or sitting in the bank account not being used either to pay down debt or to be invested. And finally, financial controls, ensuring that systems are in place so that the finance function of the organization works smoothly and that there is a minimization of unintentional error or fraud occurring at the organization. This concludes the introduction to financial management. In class, we will begin to work through these concepts in a case study format, which means that you're going to see how to apply these concepts in a real-world business setting. So be sure to attend the lecture, and I look forward to seeing you then.